Good morning. We're going into the morning here with the Fed Fund futures pricing in a cut in 2026 here, and it's now being priced into September. Now the second rate hike is being priced into now March. It was pushed from December to January to March of 2027. You can see how closely these numbers are here. We're at 33.7, and the moving into January is a 33.3, and then being pulled forward into December is just a 32.7. And so we are just very close here, kind of shifting around between March and then having another rate hike in December of this year. And one of the things that's very concerning about the current environment that we're in right now is that the markets are very complacent. And you can tell they're very complacent because we haven't had a squeeze up into resistance. There's not nearly enough panicking, and there should be more. And that is what could send the indices into a continuation of this sell-off. The actual lack of sellers, lack of panic, is actually kind of surprising at this moment. But when we look at the leading indicators, when you look at what's going on in the broad markets, the dollar is literally going straight up here. It's going straight up. We're very close to completing this daily long target here at the 101.845. The inverse of this is the euro, and it has, you could make a case, quite a bit of room for a fall back down into its larger targets down here at the 1251s. So I think you could make a case here that there's much more room for the dollar to rally as we're moving forward here into the second half of this week. Euro can keep on trending down to its target. The DXY could just go right through it. And of course, we know that there's lots more room at the end of this year here for the dollar strength trade. We've been expecting it since January. It's working out. It's working out just as we had seen in the end of 2022, and then previously into the end of 2018. Bank is holding up inside of extensions. This makes the Russell the most bullish of the indices. The rest of the indices are inside of shorts. And then there's the VIX. And it just keeps defending its extension. The extension long level, we had the same anchor to new high extension long level 24 hours ago. And it completed its profit target by the time that we got into the 9:30 time frame. Now, might not get to its profit target here in the same way that it did yesterday, but it's the same anchor to highs. It bounced at the same time. It's not completing at the same time, though. And if the VIX continues to hold above its 1895, the ES and NQ are going straight down in extensions. The YM's inside of its traditional shorts. Its very first measured move shorts after trend breaks. So we have been witnessing Wall Street accumulating a position in a dollar long, raising US dollars. They are buying the volatility. They are buying the VIX, buying volatility. And this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.